Good morning. I'd like to introduce to the stage now Nishil Shah from Coinbase, who's going to talk about, what are you going to talk about?
How to not steal money, or how to steal money, maybe from merchants. Okay, cool. So my name's, let me reset this. So hi everyone. The title of this talk is Protecting the Bridge from Dollars to Bitcoin, Securing Coinbase's Edge Payments Infrastructure. The TLDR is how do you threat model a payments network, right? If you haven't been in the payment space, how do you even approach security in the payments world? Nope.
Just frozen out. Is it working this way? Oh my God.
All right, please bear with us.
Yeah, go ahead and talk this.
Yeah. There we go. Cool. Thank you. All right. So quickly, we'll go over. I'll just quickly introduce myself. What we mean by secure in payment networks. We'll talk about privacy in payments and some of the interesting things I've personally seen when dealing with payments networks. We'll talk about what a payment network is. We'll actually threat model a couple, and then we'll talk about some of the common tools we have in the AppSec world and how we can apply them to payments. And then we'll just do a quick recap at the end. So my name's Nishil. I'm on the application security team at Coinbase. I'm one of the maintainers for Salus, which is our open source security scanning orchestration tool. And then I work with our fiat payments engineering teams. And that's largely what this talk is about, is distilling a lot of interesting events that have happened over the last few years into this talk and some of the interesting things we've seen. So what do we mean by secure in payments? I think it's important to have a common definition. So should a security team care about business logic bugs if they lose money, right? Should these bugs be considered security impacting? For example, is it better to place categories and argue over whether this type of money losing bug or issue looks like other security bugs, right? Maybe we're more familiar with cross-site scripting or CSRF, but does that really matter in this case? Right? In the AppSec world, the SQL injection or stored XSS or RCE may cause significant damage and may be the focus of most AppSec programs. But what about in the payments world, right? Here, I believe that we should only care about issues to the extent they actually impact a payment system, right? For example, a bug that has money printing implications is much higher severity than just some arbitrary XSS. So the two goals that I believe to actually meet a definition of secure in payments, the first is minimize money loss, right? Preventing all money loss is actually impossible in a lot of payment networks, and you might be very surprised by this, right? Reducing a merchant's loss to zero is actually not possible. The second goal, though, is no data loss, right? We should prevent any personal information from leaking out. But you're asking, well, this is a talk about payments. Where is PII, where is personal data actually involved in this network? So we'll go over that. So KYC, AML, and privacy. So KYC is an acronym, Know Your Customer. It's typically involves some sort of ID verification and some level of understanding of where a customer earns their money. AML means anti-money laundering. AML is the goal, whereas KYC is a control to enable anti-money laundering. So let's go over a quick example of kind of a very simplified example of what this looks like. So Garfield here is trying to deposit some money into their originating bank, right? You can think of this you as a customer trying to deposit cash in Bank of America, Wells Fargo, Chase, what have you. This amount the transaction is transferred to the correspondent bank, right? So this is some middleman bank. And along with that is some identity information about Garfield. This is actually transmitted as part of the transaction. This also gets sent to the receiving bank. So this is the end bank the merchant may be using. And that often is relayed to the merchant. So even though Garfield believes they're only sending this transaction data, banks are actually implicitly sending a lot more throughout this chain. So why does maybe the correspondent bank get this information? What's interesting here is that the intermediary correspondent banks actually don't perform the KYC checks, the ID verification checks that maybe the originating and the receiving banks actually do. And why is that? Well, so for example, if Garfield owns a bunch of online gambling sites, right? These are known to be higher risk businesses. And for the context of this slide, risk means a higher propensity to perform money laundering. And then the originating bank starts serving Garfield's online gambling businesses, then the intermediary bank actually looks at these risk profiles and may sever banking relationships with the originating bank, right? This is too risky for their business to actually work with with a type of Garfield's customers. So that's what the correspondent bank actually plays. Then the receiving bank will also perform these ID verification checks based on the KYC checks that the receiving bank, the data it gets. What actual PII is sent? This tends to be at a high level some combination of name, date of birth, physical address, and some unique identifier like a passport number or driver's license number, right? So pretty sensitive data. So why do banks need to do this? Well, largely for two reasons. In the US, there's two laws, the Bank Secrecy Act of 1970 and the Patriot Act in 2001. And there are other smaller laws that govern this sort of limitation. So let's look at quickly how this plays out. So there's something called a CTR and a SAR. CTR is an abbreviation for a currency and transaction report, and a suspicious activity report is known as a SAR. So here, Garfield wants to submit a 10K cash deposit to their bank. And what happens here? The bank will receive that deposit. The clicker is broken. Okay, I'll just use the. So the bank receives the 10K. They actually file what's called a CTR with FinCEN, which is a government agency. This involves all sorts of details about Garfield that gets filed with the federal regulators. So Garfield here is like, wait, well, I'm smart enough. I'm going to send a transaction for right under this 10K amount. I'm going to send it for $9,999. So what happens then? The bank says, well, obviously you tried to skirt the CTR requirements and actually file a suspicious activity report, known as a SAR. Right? What does this mean? It basically means the bank suspects something is weird in your transaction and they will file this with the federal government. It's actually illegal for the bank to tell you that they filed a SAR against your transaction or on your account. And it's actually illegal for any of the compliance officers at the bank to tell any other employee at the bank. It's actually a criminal penalty under US law. What happens outside of the US? Well, there's an agency called the FATF, the Financial Action Task Force. And their job is to come up with recommendations on fighting money laundering and terrorism financing by working with countries to update their laws and regulations. So getting blacklisted by the FATF has no power in of itself, but a lot of governments will use that blacklist and respect their decisions and will cease international banking operations with that country. Right? So the FATF has lots of power, implicit power, but no explicit power. So that's just like largely how the international world is governed. Just basically this bureaucratic body that sits in France that's not elected by anybody. But back to the privacy section. So we're thinking about the scale of privacy, what is the most preserving and least preserving privacy type of payments. So large international payments are generally the least privacy preserving. And this makes sense because as a country, I can regulate domestic payments within my country. I know the laws within my borders. Right? So small domestic payments are generally the most privacy preserving, but cross-border transactions, for example, I don't know maybe how good the other country is for their money laundering laws. And so that is generally when the most sort of identity information is sent between banks. So a company that operates in this financial world can either adhere to these rules and play by these rules and sort of sacrifice some of these users' privacy, or you don't get to operate in this world at all. And that's sort of the decisions that you have as a financial company. So the best we can is we don't want to prevent data loss, but what it means in this case is a lot of these institutions are going to see data, very sensitive data about a customer, and that is considered generally in scope for most payment systems. What we don't want to do is have anybody who's not authorized to see this data not being able to see it. So there's definitely a gray area that operates. There's no total privacy in the current system. Cool. So let's talk about payment networks, right? This is a way for customers to send you money or for your business to send money to your customers, right? So you can think of this as credit cards, banking, ACH transactions, right? So this is nice, right? Your business is like, let's take money. Like, this is good. This is how we run. This is how you get payroll. It's all good, right? But if you're in security, you're like, okay, it's not this simple. There's no way it's this simple. And you're right, right? If you're in traditional AppSec, you would start with some sort of fundamental model and rules about how something should work. So think of the browser, right? The browser has the same origin policy. It's a fundamental rule about how a lot of controls within the browser work, right? Mixing code and content gives a rise to a lot of AppSec vulnerabilities, right? And our job security. The web browser framework, right, is fundamentally flawed in certain cases. And like we all know that. There's nothing we can do except thank our lucky stars that we will have infinite job security, because XSS is never a solved problem. But back to payments, if the goal is to protect money and data in this new system, we should at least know and understand the basic operating rules. If we don't know these, we'll likely make mistakes in our assessments and threat modeling, our integrations. For example, not all payment networks finalize when you actually receive your money as a merchant. Let me say that again. There are payment networks that will give you your money and then take it away from you, not minutes or hours later, but it could be weeks or months later. We should know how customers can initiate disputes and what rights each side of the transacting party has, right? For example, if a customer claims a transaction is fraudulent, but the business is like, no, this transaction was not fraudulent, the customer is lying, what rights does a business have in this case? Right? We should know how long it can actually take for transactions to finalize, right? Does a transaction need to be in a terminal state for the state to be finalized? And how long does it need to be in that terminal state? Right? Some of these payment networks are operated by the time it was in this terminal state rather than actually being in that state itself. Cool. So let's talk about, at a high level, two types of payment networks, just two large characteristics that I've generally seen. The first is pull payments, and then the second will be push payments. We'll get into that in a second. Pull payments are primarily used in the US, and most consumers are familiar with this type of system. And let's go over an easy example. So Garfield uses a card to purchase lasagna by presenting the card to a grocery store. Right? The shop asks permission from the bank to charge the card. The bank sends the money to the store. The store sells lasagna to Garfield. Great. This is grossly simplified if you're in the credit card world. There are many players, but at a high level from a consumer, this is what it looks like. The point is that by presenting some credential, the shop acts on behalf of the user to pull money out of the user's accounts. Right? Push and pull actions are based on the perspective of the buyer and their bank account. Right? So here, again, the merchant is pulling money out of the bank on behalf of the buyer. So some examples of this are US debit and credit cards and the ACH network. If you don't know what ACH stands for, that's okay. If you don't know what it is, that's okay. You probably interact with it. If you have direct deposit enabled in your own, as part of your salary, how you take payroll. If you've moved money through your 401k, you've likely operated with the ACH network. So in this example, let's take a look at exactly what happens. Checks are often use the ACH network. So in this case, Garfield wishes to write a check to their merchant. The merchant likely converts this to an e-check nowadays. This information that gets sent to the bank, usually electronically, comes back to the merchant, and then Garfield gets lasagna. So let's think about an attacker, right? What is the only thing that authenticates this check? Signature? No, not really. Nobody really checks that these days. The routing and account numbers on the bottom of every check is what routes and authenticates the payment. Right? What's the secret required? No secret required. Now, most of you in the AppSec business full-time are probably a bit baffled. Like, all you need to drain a person's bank account is a routing and account number? Yes. However, most banks have some additional protections to varying degrees of usefulness. At the payment network, though, the only thing you really need is access to the ACH network and the very public information about a user's routing and account number. Right? As a result, there's obvious fraud in this system. Right? This is why banks allow you as a consumer to reverse a transaction for months on end, and is a right actually encoded into federal law. So let's take a deeper look at actually how this money moves in the system. And then we'll go over the cases like the fraud cases and what merchants can actually do to protect themselves. So how does money move between banks? This is largely manual right now, from small bank to a larger bank to the Federal Reserve and then kind of back down. So this is kind of what it looks like. Garfield sends money to maybe their local credit union, goes up to some bigger bank, maybe even a bigger bank, and then up to the Federal Reserve. And then it comes back down the same chain. Right? This is largely a manual process. Right? Even though the sending of data is automated, the processing of transactions is actually very manual. Right? And how are these transactions processed? Well, they're actually processed in 3 batches at 6:30 p.m. Eastern Time, 12:30 a.m. Eastern Time, and 3 a.m. Eastern Time. Right? If you don't make a payment at this time, it gets processed in the next window. Right? So this is not a real-time payments network, a real-time payment system. Right? So this is why when using the ACH network, it often can take days for transactions to move through the system. So there is something called same-day ACH, which I will mention briefly. The US supports the ability to processing outstanding requests 3 times a day, which I mentioned earlier, instead of once. And this was implemented back in 2019, right? So the improvement to the ACH system since 1970 was that instead of 1 processing time, we will have 3. So the actual file format that gets moved through the system is called NACHA. It's an XML-based file or a fixed-length binary-based file, depending on which banks and payment process you're dealing with. And even though this is electronically submitted, there are telltale signs the files are often modified by humans. Parts of names get deleted, address fields are inconsistent, for example, especially in the binary format where files generally don't even meet spec. The way you resolve this is you get a file that doesn't meet spec and you call the bank and tell them to please fix their stuff. So NACHA is also, it's the name of the file format, but it's also a group that governs the ACH network. They set the rules, right? They're almost a quasi-governmental agency in the same way that the Federal Reserve is a quasi-governmental agency. My personal favorite joke with NACHA is nacho money, but bad puns aside. We can reasonably see how a system built in the 1970s, right? This is before email existed, right? With limited participants, limited trusted participants, and really without thinking about security, and really having sort of any modern technology available to them, this is kind of a reasonable system to come up with, right? This is a system built by and for bankers, not a system built by technologists. So does this kind of sound like anything we know about where things are kind of fundamentally flawed? Oh yeah, browsers, you're mixing code and content in HTML. So we can't just laugh at banks and say they suck, right? We have our own problems too. Okay, we mentioned that there was fraud in the system and how that fraud can be committed. This is not saying you should do this. This is a purely an exercise, a thought exercise. So ACH fraud against a consumer, right? So if we have a rogue merchant, what happens in this case? Garfield writes their check. The attacker, maybe the malicious merchant, gets a hold of this check, right? The only thing authenticating this payment is the routing and account number at this point. They mess with the data. Maybe they change, $100 to $1,000. They ask the bank, and the bank's like, yeah, it seems reasonable. They give the money back. They give the money to the attacker. So how do you protect yourself? Well, so the one way you can do this is you often will call your bank up and say like, hey, I didn't authorize this transaction, please reverse it. Okay, so that's pretty good. Like as a consumer, even though this can happen and it'll suck when it happens, there's at least a recourse and one that's very friendly to consumers. But on the flip side, as an AppSec person trying to protect merchants, what happens in this case where the consumer, or the end customer, is actually committing fraud against the merchant? What happens here? The attacker writes a check, gives it to the merchant. That data is sent over to the bank. The bank's like, yep, here's your money, sounds good. Shop gives the lasagna to the evil Garfield. And then here, did it go? Oh, the attacker calls up their bank and reverses the transaction, right? The very same mechanism to prevent fraud against consumers is abused here. They call up the bank, say this was a fraudulent transaction. The bank reverses the payment, pulls the money out of the merchant's account, but the merchant is left holding the bag, right? The merchant gave up the goods and lost the money and have nothing to show for it. So how do we protect from this fraud, right? Is this a security concern? So one thing to remember, if our definition of secure was loss elimination, we could not be secure in the system no matter what we did, right? So this is one of the reasons the original definition was minimize money loss. So why even accept ACH, right? We talked about kind of like, this is really messed up. Why should we actually take it? And what this chart represents is that the number of transactions for a business to take card versus ACH. ACH is a much smaller amount versus maybe taking card payments, right? This is what you're used to pulling out your credit card or debit card, right? But the amount of money moves through ACH is 7 times greater than what moves through cards, right? So you're not using ACH to buy a cup of coffee, you're using ACH to fund your 401k. Right? So if an investor needs to move $100,000, the investor is not using a debit card, they're using ACH. Or maybe a wire or something. But in the US for domestic, they'll use ACH. So we talked about, okay, so now there's fraud in the system. The business requirements, we probably definitely need to take ACH. So what can we do as a business to actually protect ourselves? So this is one common mitigation that's put in place by a lot of companies. So here, the attacker writes a check to the merchant, same thing, but this time the merchant asks, prove that you own this bank account as a way to prove the intention that you're writing, that this original transaction was made by you, right? You cannot later claim that this is fraudulent, right? So please prove that you own this bank account. So the way that happens is the attacker then submits their banking credentials to the merchant. They say, here is my bank account, username and password, TOTP code, SMS 2FA, you've probably seen this. The merchant then takes this information and submits it to the bank, and like oftentimes will just log in as the user to prove that they have account ownership. The bank's like, yeah, this sounds good, and then continue with the transaction, right? Money goes to the merchant, the attacker gets lasagna, the attacker is thwarted in this case, right? Because we've used this mechanism of having authentication on the payment to make this whole thing work, right? So most customers, so the other alternative here is maybe you place the funds on hold for 6 months, and most customers probably won't use your product because they don't want to wait for their funds to arrive in their account for 6 months. So protecting funds here is actually pretty hard if you don't have holds because the business bleeds a lot of money, so you end up with this other system. But if you're an astute listener, you may have learned that why did I just submit my banking credentials to this merchant? Like, what the heck? And this is why. We want to the businesses want to transfer risk back to users, right? Give up credentials and by proving account ownership. Not a great. And I will mention that this is likely against the terms of service for most banks. When I was just researching, most explicitly prohibit users from sharing passwords that isn't their banking site. And then the claims that federal laws have to protect consumers for unauthorized transactions no longer apply. So consumers are stuck in a very weird legal gray area where they're not actually being protected because merchants are doing the best to protect themselves against this fraud in a system that isn't really designated, that isn't really designed for the 21st century. Then you may be asked about, what about like OAuth? That seems like a reasonable approach to the system. And yes, you're right, you'd be right. But usually the OAuth implementations for most major banks only involves pulling down transaction data, and it's only supported for major banks, right? They're not used to actually authenticate transactions or authorize transactions. Right? And these are the major banks, right? This is like Citibank, JP Morgan and Chase, Bank of America, Wells Fargo, Capital One. If you're down at your local credit union, they're likely not supporting OAuth. So again, this is only for pulling transaction data. Like with the ACH banking rail, you only need a routing and account number to still charge a user at the end of the day, right? This is just sort of a band-aid on top of the system. But then at the same time, we ask, why not just fix the whole thing? And I'll say, at some point, right, the incremental improvements to the system is actually very hard to make. For example, JP Morgan Chase had a bug a few years ago where signing into your account would give you access to somebody else's. Like there was no like inherent, there was no like crazy cross-site scripting or anything. It was just like I signed in and I got somebody else's account, right? TD Bank, they had an upgrade that went bad and the site went down for users for over a week. Imagine not being able to access your bank account for over a week. And now we want to talk about changing the entire payment network in the US that operates at billions of dollars of scale. So you can imagine why banks are very hesitant to actually change anything here. So the technical risk for migration is like a very real thing for banks. And then you talk about debit cards. US debit card and credit, it's basically the same fraud vectors. Credit card, but the settlement time is actually a lot faster. And so they found but internationally, we found a much more reasonable solution. And let's go over this other type of payment network. It's called a push payment. So here, push payments, Garfield tells the bank they wish to send the merchant some money. And then the bank sends the merchant some money. Very easy. And then the merchant says, OK, great, I'll send some lasagna to Garfield. This is great. And some of the ways that you may be familiar is like PayPal. If you've ever checked out with PayPal, this is very much how PayPal works. But internationally, 3DS cards or international wires are very common payment networks. Let's look at an interesting example about like thinking about which payment network you're integrating actually matters. And like let's start threat modeling some of these in more detail. So let's talk about the 3DS card flow. And I'm going to simplify this down in this first example. The attacker uses their card at the merchant. But then the merchant says, oh no, this is a 3DS card. Please go to the bank to authorize the transaction. The bank's like, OK, users authorized the transaction. And then no banking credentials submitted to the merchant. It's only at the bank. And then money gets sent back to the merchant. And then lasagna is sent. It's great. Everything works. The attacker restored it, right? There's this sort of, you've authenticated the payment as a user. Like, it must be you. It's up to you to protect your bank's, like, your banking username and password and 2FA codes. So let's dive into even more detail. Let's actually threat model this in like much finer detail about what are all the things that could potentially go wrong. So here, Garfield is the end user. We have the merchant with the same icon as before. Now we have a cop. This traffic cop represents a payment processor, because the way I often view them is they're just often redirecting the user properly from the merchant to the bank and sending them every which way. And you'll see that. So here, the Garfield submits their credit card info to the merchant. The merchant's like, is this a 3DS card? The processor replies, yes, this is a 3DS card. Please redirect to your bank. And here's this is represented by the detour. And then they go to their bank and submit their credentials at their bank to authorize the payment. Money is sent back. Now we're going to quickly take a break. This is a async flow where the bank processes the transaction, submits it to the payment processor, and submits it to the merchant. And then, but the user is still waiting on the banking website. So here, the bank says, please go back to the payment processor to be further redirected. Okay, the Garfield's like, great, I'm going to go to the the payment processor. The payment processor's like, please go back to the merchant. Merchant's, this is great. Then Garfield goes to the merchant, and hopefully by this time the money that was originally represented by the money bags has already arrived at the merchant, and the merchant pays out for the goods. So let's think about all of the things that can go wrong in the system. Let's use those AppSec skills. So what are the things that can go wrong here? Depends on how this happens. We've seen things where merchants will often use like self-submitting forms and just download XSS. They'll just download random scripts dynamically as part of this flow to determine whether a card is 3DS or not. And it's like, why couldn't it just be an API call? Like, it would have been much easier. But no, they want to embed a form onto your site that self-submits doesn't actually submit anything. So that's what we've seen here. What about at this step? Open redirect, right? This is basically what this payment processor is doing at a high level, right? We want to make sure we're redirecting the user to their actual bank and not a phishing site that looks like their bank. Right? This is pretty important, right? Imagine if you're in this flow and suddenly you're just redirected to something that looks exactly like chase.com. You'd be pretty pissed. What about here? CSRF. How would you get CSRF here? So what actually happens, sometimes the banks don't actually authenticate the user when they're trying to make the transaction. They'll just auto-approve it and let it go. And they'll say like, yep, this transaction, and this could be based on some risk threshold. They'll be like, oh, this is under $50. We don't really care. Just keep going with the transaction to introduce as low friction as possible to the users. What about in this case? Right, we have all sorts of fun stuff. Data quality, right? We mentioned like a lot of this stuff is like just manually processed by humans a lot of times. Not in the case of 3DS cards because they work a lot faster, but imagine just for any sort of push payment system. What about so data handling is important. XXE, right? A lot of these files are just XML based. So you actually do have XXE in your system here. Then we have deserialization bugs, right? Just the typical, you're reading some file, you're creating some objects out of it. Depending on what framework you're using, Java, likely have some deserialization issues here. What about at this step with the payment processor? This is open redirect. And this is what you trust your payment processor, like, hopefully not to do, is to send them at the end of this flow, instead of redirecting the user back to the merchant site. So think of maybe redirecting the user back to Coinbase.com. They send the user back to like colonbase.com. User probably at that point is not thinking about the URL that they're seeing in their browser, because they're just assuming that this redirect flow is going to work. Right? So this is an actual really good point of attack to try to phish users. What about in this last step? Race conditions. What is this race condition? So this makes sure, in this payment system, you actually have to make sure that you received the money from the couple of steps earlier before actually issuing the goods, right? You could assume that oftentimes the user finishes the redirect flow before the money has arrived at the merchant's account, right? So how do you make sure that this doesn't happen, right? What happens if the user hits cancel at their bank site and the money is actually never sent back to the merchant, but they still complete this redirect flow to get back to the merchant site? So this is often, this can be an issue. Right. One thing to also do for a lot of these redirection checks is you can often check CT logs, monitor CT logs for your payment processors, and check to make sure there's no weird SSL certs being issued. I'm doing a lot of like detection on behalf of them, because oftentimes they don't do it. Okay, so let's think about, instead of, this is the flow, this is the exact same slide from before. And instead of thinking about this sort of async processing that's happening between the bank, payment processor, and the merchant to receive the money, let's think about it solely through, like, let's assume the payment is authenticated through URL parameters. This is another common flow we've seen. So here, basically, we assume some URL parameters actually is what's sent over through all these redirect URLs that actually tells the merchant that the payment has been completed. So it's just like a different flavor of the same system. So what goes wrong here? Well, how are these parameters, are they HMAC'd? Are they encrypted? How good are their keys? Typically, we've seen a lot of what I will call generously crypto creativity at this point. And it's actually something to be very wary of. Generally, most banks have very good NetSec skills. When it comes to the application security layer, a lot of their API docs will often, you'll see kind of crazy stuff where you should use reverse DNS to authenticate a payment that is coming actually from the bank. And you'll see all sorts of interesting stuff that if it actually went through an AppSec engineer would probably not have flown. Okay, so let's think about the money bag flow, what I will refer to as, this money bag flow from, not the URL parameters, but the other one, where it was just two. And let's assume let's look at that async processing again. Usually how that happens is through SFTP buckets. So that just means the bank sends the payment processor some money, however interaction they handle that's a black box to the merchant. That gets dumped into some SFTP bucket, goes to the merchant. Merchant usually acts the payment, sends it back to the payment processor. Payment processor is like, great. So what actually goes wrong here is usually race conditions. And one of the things that we've seen is payment processor, as soon as you will read a file, the payment processor will delete the file off the SFTP bucket. It's a good security practice. But what can happen is if you as the merchant download the file, but don't actually, but you have a connection timeout, but you successfully deleted the connection, the payment processor doesn't see that you've gotten the ACK back in the HTTP request, and they've closed the connection because of the timeout. What ends up happening is that they don't delete the file and you'll double process the same transaction because you assumed this behavior of the payment processor deleting the file in the SFTP bucket. But general things with the buckets, right? You expect, ACLs for multi-tenant buckets, name collisions to prevent duplicate processing, right? You don't want some new file with newer transactions to override something you haven't read yet. That'd just be a denial of service. You expect maybe GPG file encryption, IP whitelisting. So these are pretty common that we've seen. Most banks and payment processors will offer this, which is a good sign. What's also interesting, another race condition, is sometimes the order of file uploads by the processor actually matters. So you'd expect that these files would include some sort of header of saying, hey, this is the failed payments file and this is the successful payments file. No, that's not the case all the time. What actually ends up happening is that the order of the file matters, where the first file that's uploaded is actually the success file, and the second file that's uploaded is the failed file. And then what happens there is that usually indicates there's somebody at the bank or the payment processor manually uploading these files, and when they screw up, you have what was a 99% success rate on your payments and a 1% failure switch. So suddenly you've passed 1% of transactions and you're failing 99%. Because they just switched the two files, and there's no other way for you to know. And then XXE, because most of the stuff is in XML, just because. Okay, so let's talk about, there's one last step that actually brings me some hope, and it's called reconciliation. And this is a process accountants use at most likely at your company to reconcile what their internal accounting says and with the payments they've seen flow through the system, and then compare those notes against what the processor says they sent, right? This is a really good process to do because it's like, did we lose money in this entire process interacting with these payment networks? In what way? And they can really help you catch where you're leaking where you're leaking a lot of this money. But the question is, these are accountants accessing this bucket. They're not security people. So what ends up happening? Who in your company actually has access to this bucket, right? Are these files encrypted? How do you, as a customer, call up the bank and claim to say like, hey, we've had a problem with this bucket with some of the data, right? How do you make sure that's not a vector of social engineering, that somebody can social engineer your company on behalf of the bank to get access to this data? So this is a very valuable process for engineering and security to hook into, but most people don't. They don't typically look at this SFTP bucket because in most of the integration guides you see, this is not really mentioned, or it's like a footnote. And it's usually something the accountants will ask, and it'll be in some separate email thread away from security. And so what can happen here? Talk about internal controls. So it's the same thing when you're dealing with SFTP buckets, ACLs, GPG encryption, IP whitelisting, the whole 9 yards. Principles of least privilege, making sure you're not using shared creds. Oftentimes, a lot of the banks will want to just, hey, you're the merchant, I'm going to give you just blanket merchant creds and not actually give you individual creds for all your users. Is what you end up saying, right? And this is a problem because we thought as security, we secured all the SFTP buckets, and now there's some other random one lying around. Cool. So we talked about a lot about two different types of payment networks, pull and push. We talked about the ACH network as an example of the pull-based network, and we talked about 3DS cards at a very, very high level as a push-based system. Let's talk about some of the AppSec tools that we can actually apply in the payments world to actually help us make this system better for us as security practitioners. So vendor reviews are actually very boring, but they're actually super important in this process, and something I've taken a lot to heart here. So the first thing is like having strong partnerships, right? So building relationships with important stakeholders, not just engineering, but your procurement and your business operations teams who are writing up these contracts, because you want to be able to tell them there's like an existential risk for integrating with this payment processor before they sign the contract. Once they sign the contract, usually it's so expensive to back out, it's not gonna happen, right? So you as a security person, if you can loop into that process, this is your best chance of actually knowing what are potential problems and informing those partners, right? You can inform your engineers of like, hey, these are the issues and these are the controls we actually need up front before they start any work. And this is just like by reading the API docs, right? Like that's all you really have to do in this process. It's actually very informative. And this is a time where you can say like, we can't integrate with this payment processor because of X, or you go to the payment processor and you ask them, why are you doing X instead of Y? And can you fix it? Right? And this can actually make your engineers' lives easier and prevent them from making mistakes. Threat modeling, super important. I mean, that's what we did in most of this presentation, right? Is at a high level. But actually building out threat models, making timely updates, right? Not just when your systems change, but also understanding when the banking APIs change, right? We've seen a hesitance, a lot of hesitance around versioning APIs. From a lot of payment processors, right? They will claim to have versions, and they'll say this is API v1, and then we'll introduce breaking changes to API v2, and then a payment processor says, oh wait, but we're going to make a change to API v1 that isn't breaking and then is breaking. So there's a lot of like engineering immaturity at a lot of these shops. And then automating controls testing, right? Are we, IP whitelisting, or sorry, Domain whitelisting for like open redirect is a super easy thing to test for, right? Just like a unit test, right? You can just test this there, and you can automate this control. Static analysis is actually important. So what happened? Was 1 + 1 2? Well, it really depends. What if it's $1 and 1 cent? Right? Units matter here. What happens if you're adding $1 and €1? Is the answer supposed to be in dollars? Is it supposed to be in euros? Is it supposed to be some other currency? What do you do? What about trying to represent a decimal number as a floating point? 0.1 and 2f, this is Python. So let's take an example of that quick. 0.1 plus 0.1 plus 0.1, does that equal to 0.3? No, it's false, right? The IEEE floating point spec is you cannot represent 0.1 exactly. Like it is impossible. It's like 0.1 with like 5 zeros and a bunch of other stuff at the end of it. And this is just a base to like approximation of the whole thing. And so you end up in this very tricky scenario if you're trying to use decimal places or decimal like points in these operations, you will be off. And it's generally okay for most companies because you're only going down to like 2 decimal places. But when you start dealing with like crypto and the resolution is up to like 18 decimal places or 20, this stuff really matters and you start adding up very quickly in mistakes. Bug bounties, super important, right? At Coinbase, we encourage reports that take advantage of payment systems, and our policy for program rates these bugs higher. Right? For most companies, scary AppSec bugs like cross-site scripting may be a P0, but we want to see cross-site scripting that could potentially steal money from our users. Right? Our highest bounties at Coinbase have all been payments either related to crypto or fiat payment systems. Right? We want to make sure that the severity of this is in line, and the payouts are in line with the actual report, right? If there's a potential to steal $10,000, we want to make sure we're paying out more than $10,000. It's actually in the reporter's incentive to come to us to tell us about a problem. And then blameless retros, right? There could be an instance where, hey, our engineers just lost $5 million this week, and they will feel bad about it, right? There's no need for the security team to go yell at them to say you screwed up. That doesn't help anybody. And it's really take the time to figure out what controls failed, not who failed. And it's easy. This is a general security concern, but it's very much, it comes out a lot more, especially in the payment systems. And it's very easy just to like blame engineers for screwing something up, when it really could be the payment processor, because we've seen all the shenanigans that happened before. Security champions, something we've been working on internally at Coinbase. And it's like and we're probably using it a lot for controls testing. So we're trying to work with our engineers to figure out how can we add like automated unit testing and integration testing to actually test for controls within these systems, because they have a much better understanding of the tooling and the frameworks that they're using. And it's not something security could just build on their own and being like, here's something you should definitely use. It's something that I have ideas about what we should test for, and the engineers have a much better idea of how we can test for it. Cool. So in conclusion, define secure for your company if you're in the payments world, right? What is secure in your environment? Because sometimes your engineers and your security team will talk about 2 different things. Know your payment networks, right? You wouldn't start, browser security without understanding how the browser works, right? What are some of the fundamental controls? Same way for payments, you shouldn't really threat model a payment system until you actually understand what the payment network offers. And then apply the tools you know. We have actually pretty good AppSec tools that have been around for 20 plus years. Applying them to the payments world, it takes some difference. There's some differences, but I think in general they've worked pretty well. And then be a partner to your business at the end of the day, right? Some networks and processes are better than others, and being a partner helps to make those real risks apparent to the rest of the business, right? If you come back at the end of an integration and say, we cannot integrate with this payment processor, even though we're about to flick the switch, it's not everybody's gonna laugh at you. It's not gonna happen, right? But hooking in to when you're doing your vendor procurement is the correct time to actually say, no, this vendor is unacceptable. And then don't assume anything about payment networks, right? It's easy in some of the data flow diagrams I showed. It's like, oh, this should probably work reasonably well. And it's like, no, they don't. Everybody likes to do very creative things, which you would think would be the opposite in the financial world. And then, ask a lot of questions, right? Internal partners, engineering, and even the vendors themselves, right? A lot of times I get on a call with vendors and I'm like, why do you do X? And sometimes they don't have a good answer. Sometimes they have a good answer, and sometimes they don't. And then they all want to do what is best, for your customers and whatnot. So sometimes, even if it's the vendor, sometimes you just talk to them like, hey, could you do this instead of, could you change this in your API? This would make my life easier and make it more secure for all your customers. And they're like, oh yeah, we just never thought about it. And usually vendors are very open to updating their APIs. Thank you. Thank you to BSides, thanks to the Coinbase payments team, and thank you for listening for me ranting a bit up here.
Great. Thank you very much indeed. That was really brilliant. Thank you for donating your speaker gift to charity.
Yep.
There's a t-shirt in.
Sounds good.
Thank you.
Thank you.
There were no questions on Slido.
Okay.
It was obviously pretty transparent. So again, thank you very much for that. Brilliant.
All right. Does anybody have questions in the audience? In the audience here?
Well, we've got a few minutes. Are there any questions that people didn't put on Slido they just want to quickly ask?
Nope.
Nope.
Okay.
I have one.
Okay.
How do you make sure you get early enough in the procurement process that you can actually make a difference by going, no, that processor doesn't know what they're doing?
Honestly, it was just like find out who was driving that business development within Coinbase, and figuring out who was the actual point person and being like, hey, we want to help you do your job better, and making sure we're reducing risk to the business. And they're like, oh yeah, come along with all the calls, and then you just get more meeting invites.
Thanks.
Cool.